All right, what is up, traders? Let me get this music off. Shut up. All right, we kill that stuff right there. What is up, traders? How's everybody doing on this fantastic Tuesday morning? If you are new, welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you become a better trader. So far, we're looking at Bitcoin trading in a range. Yesterday on Bitcoin, it did some crazy stuff. I mean, I actually thought we were going to see some bullish continuation off of it. Technically, we did get bullish continuation off of it. If you look at this day's close right here, right under this trend line that we've been watching, it is taken off of the line chart. So as to, just based on the closes, you can see it's a perfect close right there. However, it has been very wicky and very difficult to trade. Yesterday looked like we were going to see some bullish continuation, like I said, but then it closed right back down under this trend line. However, it did close above this candle's closure. And with an upside wick like that into this, what you could consider a massive supply zone, we just have not been able to get anything going on the bullish side above all that. All right, and that's what you need to see. You need to see bullish continuation. However, with that being said, you have not been able to do anything to the downside either as far as bearishness continuation. When we did finally see this thing break down below this trend line, it stopped dead at this little daily candle support. I mean, perfect support test and close above. And then the next day, you took out the previous day's lows and shot up. So this is the area we're currently watching. If you are bullish, you would want to see no lower than this line. I mean, a wick under it down to this level could be potentially a possibility, as that is your current Heath level if you are going to see any bullish continuation. Why is the Microsoft Store loading up? Go away. All right, here we go. So as of right now, I am currently watching the weekly Heath level. Let me go to the weekly time frame, as you can see it more beautifully here. This is your weekly close. This is your weekly support. It is the highest closing weekly candle in this year's range. Let me say that one more time. This is the highest closing bullish weekly candle in this year's range. So we need to see bullish continuation. We need to see closes above this right here, this line in the sand, 3613 for potential continuation. All right. So this does not look good, as it is a lower low compared to last week's low. And last week's low, compared to last week's high, we have a lower low in, but it is Tuesday. So this is the area where we typically look for the weekly range to go, either in the up direction or the down direction, unless it's going to be a sideways week. And if that's what's going to happen, then we can look for potential pullback down to 3170. So back into the hourly time frame, since we do have confirmed dollar weakness, we have broken down. Now this chart is going to be nasty. It is very ugly, but I'm trying to get you to see something here. All right, so if you were going to see upside continuation on the dollar based on this move here, this is the major move of 2023. It's where you put in a yearly high and then you put in a fresh yearly low. So that is your major move as the technicals are concerned. So I just simply took this low right here because it measured up perfectly, and you could see that price had been using that as a trend line support on the downside. However, yesterday we broke that. Now, moving on into today's price action, what you can see has happened is you have tested a monthly support zone as well as this, which this is a weekly heat level right there, weekly supply. You tested that to perfection and you got a nice bounce up today, going back to retest the open. So if we do continue with the bounce from this area, 101.78 or 101.67, whichever you prefer, we would expect it to go to at least 1.0288. That would be the weekly opening range, and we would want to see downside continuation from there. We need to break this old monthly support. This is that monthly support. You can see that we did close a monthly support below. We did close below monthly support in April. However, we got a magical bullish candle trading all the way back up above the yearly opening range while closing a monthly candle above the yearly opening range. But then you fell back right back into the range. So this is exactly what we consider basically a sideways market. However, since you did make this one swing up into the midpoint of this or whatever you want to call it, my brain does not work. Anyways, this is an area where it found resistance. There's a weekly trend line. So this trend line here is based off of weekly closes as well as this one. So you do have some wicks below. It is not perfect, but you can see what is currently happening. You are wedging after coming out of a bearish market of 2022. So 2023 has been wedging a little bit near the downside. This is typically looked at as a bullish pattern. All right, it typically is looked at as a bullish pattern because when you have descending wedges, prices tend to want to break out from them. All right, so moving forward, we will see if this bigger descending wedge pattern plays out to the bullish side. However, if you do take out this low right here, you will have objective lower yearly lows. So therefore, we were looking for the dollar to break down right in this area as it was a retest of the yearly opening range. And within 3 days, boom, you broke down and you broke out through this box range here, right there. So you're seeing a little bit of downside continuation. That is a pitchfork, the word that I was looking for earlier. Jesus, pitchfork, something I very rarely use anymore these days. But I just wanted to show you, like, the dollar was trying to keep within a bullish trend, but it has been unable to do so. So we do have supply sitting above 104. We do have obvious demand sitting down below 101. All right, so with the dollar moving lower as we know it, but then bouncing back up to the open, we were watching Bitcoin for a potential short, but we needed a retest for at least me of this price right here, which is the weekly heat level. If we get a retest of that price and it stops, I don't want to see this kind of horse stuff that we seen yesterday. This is just impossible to trade. All right, it's impossible. When you have a breakout with such strength like that, you typically want to see that continue. Then 2 hours later, you're right back to where it took off from. So, I mean, Looking for shorts and high spikes is a good idea if you do have a downtrend, but you are clearly sideways up here after a nice, massive yearly opening range breakout. So currently, it looks like there's a lot of supply up here. So I am looking for a downside day to continue based on potential dollar strength. All right. With that being said, we'll go over here real quick because it's not testing it yet. The market is not open yet. So it could go up to the trend line here or just that objective level. And I do want to see a bounce from there. So maybe a test of support would put you up there, but I don't know if I would take that trade, as the wick down here has made it clear that the market can and potentially will trade back down to this level. So that is why I want to get in up here and look to aim down there. But if we get this jankiness that we got yesterday, then it's not going to be tradable. All right. Now, there's a lot of people that probably said that they caught the short up there, but I found no basic level for taking the short. Not one. I mean, that you were clearly above and below all the major technical levels. Right there was an 8-hour Heath level that you could have watched, or this one right there, I guess you could have said, yeah, I shorted it based on that. And if you did, good, right? Good, you did good. But like I said, on the daily, as of right now, we do have a higher close, so it is above resistance. We did get a very high wick, and today we're trading inside of yesterday's range. So this is the moment here for Bitcoin. If it is going to go higher, then I do want it to stay above these two levels. All right. If it does go higher, then we will look for a pullback into these levels. These are the levels right there that are important because price is just ping-ponging back and forth in them. All right. Out of them, in them, out of them, whatever. But they will offer up a potential opportunity as we get the market open. All right. Going back to on watch, let's check out the S&P 500, see what it's doing so far this week. This is your weekly expected move. Let me turn off log. Oh, wait, log was off, wasn't it? Shoot. Yeah, log was off. So this is your weekly expected move. This should be exactly the same, but it looks like TradingView has moved it again. That is a $64 move. Yes, TradingView has moved my lines again. This is supposed to be dead center. That is where you closed last week. All right. So here, let's do it this way. Let's pull it up on the actual chart here. Boom. And we want SPX. And we're already good. All right, so here you are. This is your weekly expected move. This is what I tried to draw out on TradingView, but obviously they have moved the lines. The lines were absolutely perfect, just like those were last week. All right, so anyways, moving forward, this is where the market closed. So if you're looking for downside continuation, like if you think this is the end of the S&P 500, that this was nothing more than a liquidation move, and you're going to see price pull back, I hardly agree with that sentiment, but we'll see. We do expect a pullback. Obviously, this thing's been shooting to the moon for too long, so we have seen a pullback. But this is the range right here. So if you're looking for shorts, you would probably want to wait until you get back inside of the weekly expected move to do that. You have a daily resistance right up there, which is perfect. Down here, you have a daily support coming in the lower edge of the expected move. When you're in the middle of the range like this, there literally is no trade to take because this is the range that the market has expected to happen. We do have CPI tomorrow, so there might not even be any massive trading moves today. On the front of trading moves, the only open positions I currently have are these two, Aussie CAD. I am just looking for a simple bounce off of daily support. So here's daily support. This asset is in a downtrend. You can see here when we put in this daily expansion, we tagged the 50 to perfection. Yesterday had a bearish engulfing move to the downside. So me looking to catch a bullish trade off of this falling candle is probably not the best solution. However, this white line that you can see that's barely above the yellow line, that is the weekly, quarterly, and monthly open. So there is significance there. And if you look at the weekly here, you can see last week you pulled up into that, right? This week you have already tested it. Oops, you have already tested it and you have bounced. All right, you have bounced back above daily support right there. So there was your test and your bounce. Here we open. We had a slight move up and a vicious drop for today's range. Here is what it looks like. Nasty, right? Trying to get in front of this, not the best idea. Not the best idea. But if we're going to see a bounce, because this thing has been extremely bearish, we did get this real big move here. We haven't even tested the midpoint of it. Then I expect that you could at least test the weekly opening range. So we'll see what happens. As long as we're closing hourly candles above this line, I'll keep the position open. If we start closing hourly candles under it, or it looks like I'm going to get stopped out, I'll just close the position. I won't eat a full stop, all right? But this is a pretty drastic down move. You are down 0.30% on the day. So it's literally trying to pick a bottom, if you will, when yesterday showed an obvious move to the downside with a pullback. So when you see stuff like this, you don't look at this wick as buying pressure. You typically expect this wick to be filled in, right? That's what you typically look for. You typically look for that to be filled in. It looks like that is exactly what is happening. So we will see the first chance, to test daily support there. And on the hourly, it's not really there. It held there, it held there, broke down below it, back above it, but this was a lower high. So it does look like it probably is looking to fill in this range right there. That's that weekly or that daily wick. All right. But we'll see what happens. We'll keep that on, or we'll get stopped out, one or the other. And then obviously the other position that I am holding is this short on USDJPY that I shorted way back in October of 2022 when the BOJ was expected to interfere, if you will, with their own currency, as well as dollar weakness. So I was looking for yen strength, dollar weakness, and it worked out to perfection. Was one of the best trades of my life, in fact, for a day trade, because this moved in one day 530 pips. That is amazing. Let me shake up my V8 here. V8 is in no case sponsoring the makings of this video. Drink your V8, kids. It's good for you. All right. Now, thank you so much, Aaron, for the $5 super chat. I appreciate you, my friend. No question. Just thank you. All right. So, yeah, those are the two active positions that I'm currently looking for a day trade today. And then, of course, Bitcoin, if it will give it to us. We're more prone to look on the short side since all of that nasty supply up there. All right. Well, we'll see if it plays out. All right. And if you want to take this trade, which, I don't recommend it. It's just one of those things that look good. When I first looked at it, took 5 minutes to look at it, and I was like, yeah, why not? Ben had a really great week last week. Started pretty strong already this week on Bitcoin. So we'll see what happens here. All right. On the Forex. You're literally testing that level right now. Literally. Like you can see where my entry is. That's based on the spread. This is Forex.com. So there's a 2.4 pip spread. So if you were to enter now, obviously your position would go up higher. You can see that I have my stop loss setting right under that weekly Heath level. So if it gets down there today, then obviously I no longer want to be in it. And that is a risk. Are you ready for this? Of 1%. 1%. All right. That's a $500.73 risk. That is 1% on the total account's equity. So if I lose this trade, it will literally be 1% 3%. And then I will catch another trade tomorrow or the next day and make 4%. We'll see. All right. With that being said, let me answer some questions real quick and we'll move on. Yo, future legends in the house. We are ready to chat. Start the chat. Good morning, fam. Good morning. Of course, that beautiful, beautiful super chat there from Aaron. Thank you very much, my friend. Let's go. Good evening, boss. Microsoft is always watching. Microsoft, probably based on the fact that the store popped up there. It was actually my fault. I was clicking on something else, but there you go. VFC long, VFC long. The market has 1 minute to open. Let's go look at VFC, as it is probably brought from the chat bot stock thing. Did you put any new links in there today? No. So here is yesterday at 8 a.m. the docs. There is VFC. You can see that the stonk GPT AI system is calling VFC a strong buy with a 10 out of 10. It is in the consumer staples sector. So let's go analyze it, shall we? We have some monthly support over there. Had a nice bounce last month. So let's forget about all that. Let's go check this out. 2 week, see what we're in. All right, so we got a 2 week support up there. Looks like we tested that too. The weekly is there. So last week, you're literally testing last week's close on today. So I would want to see today pull back to yesterday's open or last week's close, which is here. If you get a pullback to there, which should be 1870 or 1866, you could potentially look for bullish entries. So that's what it looks like on the 5-minute time frame. So this is your pre and post market, or post and pre-market, I should say. And you are getting a slight little pullback here. Let's see what happens to it if it pulls back to these levels. Let me get the Bitcoin over here on this monitor so I can keep an eye on it. Bitcoin is still trading in that 5-minute range. So VFC. All right. VF Corporation. Remember, it is in the consumer staples. Here we are over here. Consumer staples. Did not quite pull back to our level yet. So we shall see what happens. Let's go to consumer staples. No, I didn't want to do that. VFC. We're going to keep VFC on this side. Usually Brian is just looking for a tag of a technical level, and then he's only looking for a couple percent move. Typically, he's doing it with options. Typically doing it with options. Down here, let's find that sector. Consumer discretionary, materials, industrial. This is it right here. Consumer staples. All right, let's pull this up on the daily. Down here on this chart, I will not have yearly opening range. That is going to be that bearish candle right there. No, it's this bullish candle here. No, it is this one. There. There it is. Tuesday, Jan 3rd. Of course, we marked that yellow. I said yellow. All right, so there you are. Consumer staples bouncing off the yearly opening range. However, made a fresh yearly high, pulled back. Did it make a fresh yearly low? No, it did not. And you are creating a bear flag right under the yearly opening range. So in order for VSC to do good, we would want to kind of see the whole sector doing good. But that doesn't mean that it has to, as one stock can prop up the whole entire sector, depending on the weighting that it has in that sector. Does it tell us in this? Yes, see, you even get some calls here at, optimal options play at 30-day holding periods. So here you would go, right? You would be looking for the August 18th expiration date, the 12.50 call, deep in the money. I don't know why I would do that, because you're going to be paying for intrinsic value on that call. So if it doesn't get up to, that is freaking deep in the money, bro. And if it drops from where it currently is down, then that you will lose the value on that option from the intrinsic value. But did it give it a range play? Did it give it a deepness score? 32.83%. See, it does not give the risk on that. So maybe they can fix that. This is new, this ChatGTV or ChatGTV AI stock thing. So yeah, that's what he's looking at. He's looking at the number 2 pick. And so far, we haven't got a pullback into our levels that we were looking for, but it did come close. It did come close. So we'll keep that up on this monitor. Let's get Aussie Cat over here on this monitor. Of course, with Forex.com. Shit, that is not Forex.com. There we go. And there won't be any lines here because I pulled that. I did all the charting up here on that chart. So that's not looking very good as of yet at the market open. And of course, over here, we want Bitcoin. And this is all messed up. All right, so let me go back to the weekly. Yeah, we're testing weekly ETH level. That should be white. All right, just give me a second. Whoever. 18, 12, 50. Yeah, it's deep in the money. Deep in the money. And I signed up for a freaking Substack accidentally. Nobody follow that. If you're on Substack and you see me, don't worry about it. I am not going to post anything on. All right, so here's a new one. Yeah, it's the same exact thing. Everything's the same. Right there. VFC 18, 23, 1250 call. That is deep in the money. Very deep. That's not even right, is it? Yeah, that's right. VFC. Waiting for data. Of course. All right, so August 18th. Is that what it said, right? It said August 18? Yeah, August 18. So August 18, they want you to buy the 1250. Right there. So remember, because it's so far in the money, you have actual intrinsic value. Once if this thing drops, which it's a slow moving stock, very slow moving stock, which is good. But every dollar it drops will be a dollar you lose on that from intrinsic value, just based on price. But it is picking it, 38 days out. So it is expecting a strong move forward or up. All right. So there's that. All right. Bitcoin is currently testing the level of which we wanted to see it test. Almost. So do we stick this and hold, or do we roll over? Where is that? Let me get that daily line chart just so we can get the trend line on here as well. And we want that and that. Beautiful. So here to here, this is the sweet zone. This is where I would be interested in a short, as long as it doesn't do something like that. This 5-minute candle came down, almost tagged 1870 line. And as you can see, the Aussie CAD long trade is not working out. And then down here, let's just go ahead and why not put up USD JPY. Now remember, the dollar is getting a bounce. If you are wondering why this was a good short area, it's simply quarterly res. So a couple of the trade talkers in the Discord did take this short. Right there. And this is what it looks like on the daily. You can see absolute perfection. Multiple days testing, unable to break above that daily candles. Unable to break and close above. So any retest of this line would have been a phenomenal entry. All right, phenomenal entry. And it was caught, like I said, by a couple members. I wasn't really paying too much attention to that level, as I've been short this asset forever. However, one member in the Discord wanted to know if they could take a long, and I said yes. And he wanted to use the entire daily range. I am not going to mention any names. All right. He had his set up like this, long position, pretty much right on the daily level. His stop was very small, and he was looking for his profit target up there. And I told him to bring his profit target down lower, more to the midpoint of the daily range, as that is the most likely scenario. And if said person did that, said person needs to be taking profits right now. And that is a phenomenal trade. And I can't see it. If we go back to the daily, that is a 6-to-1 risk reward. So if you risk 1% on that, just up to the halfway point of the daily range, which if you notice there, I also picked what? An intraday resistance level, which is there. Now it could roll over there, but there's no guarantee. The Bitcoin short worked, and I freaking missed it because I was yittering about. Blithering about. So we'll see if it comes back up and tests the 5-minute Heath level. If it does not, then I missed it. Some of you probably could have taken that. That's what we were looking for right there. This right here is old daily res. So that would be the take profit portion. And you can see the risk to reward on that. It's fabulous. Looks like you're going to hit it in freaking 10 minutes. Which is usually when you know you're on the right side. Or at least for that moment in time. But this is the exact trade talk plan, or how we strategize, how we take our entries, how we exit. You don't want to look for the entire daily range or the previous day's range. In this case, it would be today's range, because there's no guarantee you're going to get all the way back up to the open of today's range, especially if there is intraday resistance, which there is right there, roughly around the midpoint of today's range. My madness has method. There's the Bitcoin trade that I freaking missed, and we've been talking about it all damn morning. So this one probably not going to work out. This one worked out to absolute perfection. And I will just screenshot this, which you know that I was talking about it because we were talking about it before the trade happened today on the damn live stream. Oh, here you go. Right there. Oh, shit. Well, you get the idea. I missed the wording that I put under that, but you can see here or here. That's the sweet spot for the short. And then going up here, what does it do? Right in the freaking sweet spot. Like I said, that level or this level. Right there. And you want to take profits at this level because it A is a fresh daily low and B, it is daily res. It is the area of which if you are bullish, you do not want to see today close under that. However, if I'm right, what's more than likely going to happen is you are going to trade all the way back down to this candle's close today. You know what I mean? If you cannot maintain bullishness above that daily res, you do have the possibility of trading all the way down to there. And it does look like it is bouncing. So there you go. That's your bullish and bearish trades. Any question? Any questions? All right, have we closed an hourly under there? Because we don't need to eat a whole stop. There's 14 minutes left. So looks like it's going to be a stop out. It's all right. It's 1%. 1%. VFC is moving up. So had you taken the entry at 1874, you probably are up pretty decent on the option. I don't know what option you chose. I always would pick the one closest to the money. Right? Like that one. That's the one I probably would have bought. But you got to go all the way up there just to be in the money. But it gives you a month to do it. So you could have bought in the money. That would have put you under today's open, which would have probably been the one I went with. Because each one of these are, and that's all of the strikes. So each one of them are $2.50 apart, which, makes it a little bit difficult on lower or slower moving options or stocks, if you will. So there you go. That one is moving up nicely. So good call on the options, gbtus.com. There's a ton of them too. There's a lot on this platform. So, and we have access to it. Thanks to Brian. In the Trade Talk Discord Stonk Room. Post this every day so you can look at it and find which ones you think are good buys or whatnot. If you want to be investors or trader or whatever, it doesn't matter. It's working pretty good, and combined with technical analysis, we didn't get a full-on beautiful or perfect test of that, but it was close enough. Do I dare short this thing at 34.50? Probably not, because the risk to reward is nowhere near as good as it was here. Because you got to still use this as the area for profit taking. So that would literally be nothing as far as a move, which is concerned. But anyways, we'll see what happens. And USD JPY getting that bounce, like I said, that's where you would wanted to take profits. Then you would simply take, 50, 60, 70% of the profits, then move your stop to break even. Therefore, if you get any bullish continuation, which is 100% possible because all of 2023, this asset has been bullish. All right. And if you pull up some moving averages here, just to kind of help you see where you're bouncing at, is the 50. So if you do get bullish continuation based on this, then you would be positioned perfectly and you would have the opportunity to potentially make more on the trade as it continues higher. That is why we take profits early, because we're using more leverage. That leverage is continued with your smaller position size. So by cutting your position, say in half, and you're levered 50x, then you take your stop and move it to break even. Therefore, you cannot lose money on the trade. The money is perfectly. I always take 70% to cover for any fees or any spreads. Then if I get bullish continuation, I still have the leverage applied to the remainder of the 30% initial position size. So if you were looking for like a swing trade, for instance, your stop would be much deeper. Therefore, your position size would have to be much smaller. So you're in a sense taking a swing trade, but by using a day trade entry method, it gives you roughly about the same size you would have had to use in order to be a swing trade. And you already got paid. So if the trade doesn't work out, or you get a retest tomorrow and you get stopped out, which happens a lot, but that is a very good entry place. And you found out, good job. Now it's on the daily, you can see that you have broke beneath the 50. And I don't like the fact that this was a very aggressive move. So we could see some downside continuation from there. But on the weekly, you haven't even tested the 50 yet. And you got weekly support setting at roughly 139.344, which could potentially be another entry point. VFC moving to the upside. Bitcoin slowly, and I do mean slowly, making its way up. So there was your profit. You would move it your entry to break even or a little better if you don't want to you lose any of this unrealized P&L that you would still have on. So that's just the best way that I have found, because since I can't predict what price is going to do, I do that. I take profit on every single entry if I get into profit, simply because that then allows me to take my money and run, and I'm no longer have any risk in the market outside of the unrealized P&L. Which unrealized P&L is just that, unrealized. It is nothing. It's not money until you realize it. So if the unrealized P&L gets, pretty substantial again, like say price moves up in your direction far enough and now your profit and loss is at the same that it was when you took the initial profits, you can cut it down in half. Take 50% of that and then just forget about it. It truly is, in my opinion, the best way to manage a position. Manage a position. I didn't see what that was, the intrinsic value of that 1250 option. It was in the $6 range, so it is up a little bit. So if you did buy that, you would probably be up pretty nicely. Because if I'm not mistaken, I do believe this was closer to $6 than $7, like $6.20. So you initially made what, 60 cents on the option? Not bad, because one option is worth 100 shares. One contract is 100 shares of stock. So if you had 10 contracts, that would have been a nice profit. Nice job, Brian. Nice job, Options GBT AI. These are all your strong buys. We haven't really had long enough to test this out. This is something new that we just started in the Trade Talk Discord. So we don't have any stats for you as far as how many buys or how many of the strong buys have we taken versus how many of them have we lost. We haven't done that yet. We are going to do that in the next 6 months, and I am going to be unveiling something else which is going to make that stock room very, very nice. The reason I am migrating back to, stocks and Forex is simple. It's because of my US people. They are having very much difficulties in trading Bitcoins option, or not options, but futures. So the only reason I'm still able to do it is because I am a shiller, I guess, if you can say. Not a shiller, there's a different word they use, but anyways, so I'm still able to do so. But that's the thing, right? Bitcoin is what basically everybody is drawn to this channel. But as you can see, Bitcoin has been steadily losing people's attention. So basically, nobody even gives a shit about it. That's why I trade Forex and stocks. So that way, this is a very, very diverse, if you will, trading strategy. Across all assets, this strategy works because it's price, and price is king. Price is king. It tells you whether or not you're right or wrong when you take an entry. So in investing and trading, price is the most important aspect. And that's what you're here for, is to try to learn to be a profitable, consistently profitable trader. And you can be. You just got to practice, and it's going to take time. All right. So let's go here and read some comments. Good job on that, Brian. Only significant BTC level of rejection yesterday that I can see was April's high. Any significant rejection was based on April's high. So yeah, you could have used April's high for a short. So let's put it up there and see what it did yesterday. Freaking absolutely perfect. See? Clipper 70. You are beautiful, my friend. Yes, that would have been an absolute perfect entry. I didn't think to go back and look into the monthly. But yeah. And that also answers the question of, does older levels matter? Yeah, they do. They do, especially if they are monthly, quarterly, and yearly levels. They absolutely matter. But I mean, if you mark up every one of those, you're going to have you're going to have a lot of lines to follow. But monthly levels, whether they're open lows or high or closes, are important levels. Price revisits them. And that's also obviously where the supply is setting, because you can see that you've only been able to close one 12-hour candle above that. Have you been able to close any daily candles above that? Yes, one. And it was a trap, because right after that close, you literally had 2 days of downside with this funky day trading all the way back up, making a fresh yearly high and dropping. So yeah, that would be consistent with a short entry based on this move here. So if you fib that, you're going to see probably that was pretty damn close to the 702 retracement as well. So just based on that move there, the April high got it better, but still you could have shorted once price got right back under there if you are a fib user. It is important to use the main move. Right, the main move. So going back into the 5-minute time frame, let's see if it can get up there. Did I accidentally deleted the trend line? Yes. The answer to that question is yes, you did delete the trend line. But this is where we got to see daily closures above. Why? Because the trend line is based on daily closes. Daily closes is, that's why they're important. And we need to see a daily close above that, as that would give us more bullish continuation. And you want to see bullish continuation. It's just taking its very long time to get it. Like, we're into the third week of this, fourth week. Since we made the breakout for 3 weeks, you've been trending sideways. So that's sideways. A deeper correction would be nice. It doesn't even typically have to go all the way down to the 50 on the weekly, but a deeper correction would be better for a pullback buy. Yeah, you are very far away from that weekly 21 and 50. But you can see here that it's pulled right into the 21. So the 21 seems to be a buying opportunity for now. Even though we had that nasty move on last Thursday, you can clearly see that people are indeed still trying to buy it up. Thank you. All right. Well, let's close it because I only look at them on the daily. Don't much care about them intraday. What are we doing on this trade is done and over with, so all you would be watching for on that would be daily continuations. So here's what we got on the S&P 500. A big move down. There was no news on the economic calendar. None at all. Maybe Bullard speaks, but I doubt it. I mean, it did happen at that time, so maybe he said something very hawkish like, oh yeah, there's definitely going to be at least 3 more hikes this year, but we'll see. The market is going to disagree. The market agrees with them as far as hiking July, but if you go to the next meeting, you can see there's a 72% chance they're going to pause again. And then the further you get out, 54% chance that they're going to stay paused. And then all the way to December, you can see the target rate is still 525 to 550. So for the rest of the year, the market is pricing in a July hike and then never again for the rest of the year. None in September, none in November, and none in December. And that's not what the Fed is saying. The Fed is saying they are going to be hiking. Bitcoin pulling right back up into that sweet spot as the S&P 500 moves lower. VFC already worked out. Let's put the dollar up over there. And the dollar struggling up here. That's roughly what? The open of today's range. So back to the 5-minute. That's what you're struggling at. Boom, 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 boom. So Bitcoin there still trading back up into this area. And the S&P 500, you can see that it did the same move as Bitcoin at the same exact time. 940, you had it drop out of sight. Dropped out of sight, slowly pulled back. Now it's pushing lower, whereas Bitcoin is pushing higher. Probably to stop out those folks that took that short and moved their stop to wherever their entry was. So we'll see if it gets downside continuation from here or not. Morning, he's still holding the USD CAD short. Fantastic stuff. Fantastic stuff. USD CAD. Daily. And that was a rejection of the 2-week support. That is where we were looking for the short entry, as you can see right there, going back into the daily. Oh my gosh, that is so beautiful. Beautiful. Still holding it. That's good. Obviously, Canadian dollar strength will affect that. And Canadian dollar has a little bit of strength today. It's just barely green. And the Aussie dollar is down 0.24%. So that's why this trade is definitely having some difficulties. But remember, I said I will wait on this hour close, and it looked like we were going to get stopped out, and then boom. See, that's why the close is so important. We were literally so close to the close, this thing just shot right back up. In the last 15 minutes of the hourly candle, boom, up. Right back up above our level that we were looking at, but it's a different chart, so it doesn't have those levels drawn up. So Bitcoin providing another opportunity for a short if you are short biased. But the S&P 500 is pretty close to its move. It's up off of its last week's close. See, that's how that black line is based. It's based off of last week's close. And then they project how big of a move you could see. Remember, tomorrow is CPI. So the volatility may not be very big today because it's waiting for tomorrow. But we have seen a tremendous amount of volatility in the dollar. Dollar is pulling back good. So keep holding that USD CAD trade, my friend. Keep holding it because we have seen the DXY break down. It broke down from this trend line here, and then it broke down from a larger in time trend line. So I'm figuring this is a big support zone down here. It's massive. Monthly support, also the weekly demand zone. Lots of support here. So I could see the dollar bounce all the way back up to the weekly opening, which is yesterday's open, and then roll back over again. Or it could just get as high as one of, like, say, for instance, this candle, right? And then roll over. Or it could just roll over today. But it's, it's almost green on the day. So getting very, very close. Getting very, very close. So let's see what you do with this, big boy. I mean, it's not looking good. We've had the open, and we're 30 minutes into the New York Open, so I typically want to see my entry start, or the trade start to move away from my entry instantly. So it's not having a very good time of doing that. Definitely more selling pressure today than buying pressure as of right now. Forex.com doesn't give volume info. Well, let's see what it does right here. Still made a lower high on a 5-minute swing. All right. Oi. I can't read that, Mr. B. Sorry. Pound Aussie. Yeah, it's bullish. It's because the pound is bullish. It broke out. Not really much to do here. You're trading above last year's high. Nothing there. On a quarterly basis. Yeah, but I mean, it's breaking out. I wouldn't be looking for areas to short this. All right, this would have been a buying this would have been a buying opportunity on that monthly pullback there. As you did everything we would expect, right? You took out the previous month's low. And then boom, shakalaka, back to the upside, which is here. So let's see. And it got just under the 50 for 4 days and then up. So that would have been your signal. That's probably going back to the upside. So at that point, I would have been looking for daily bearish closes. The next one you got was there. And on this would have been confirmation of it moving back to the upside. Beautiful. And I would have been looking for entries based solely on that bearish candle. This one, I would have been maintaining focal point upon that. And then going back to the hourly, you can see that, that was the close of the previous day. So you didn't spend much time. There is the open of the new day. So at this point, this is where I would have been looking for entries. More or less at 7 o'clock. This would have been the candle I would have taken it on. The bullish entry based on daily support. So it's similar to what I'm doing here. All right. You can have wicks below. It's okay. Does it hold or not? And of course it did. And boom, there it went. So, I mean, as long as it's going up, you don't want to look for shorts, because that's what gets retail in trouble. They think, oh, this thing's moving up to the upside too big, too strong. There was a 3-day pullback, but you can see that trade would have lasted for a couple of days. We pulled back, you maintained above the 21, so that would have been, okay, but like you would have been struggling for the next 4 days if you expected just a 1-day pullback. I probably wouldn't have expected just a 1-day pullback, just because this candle closed under this, making that a potential supply zone. So it wouldn't have been until we broke back above that on a daily close, which would have been there. And then I would have been looking for entries here and there. And on this day, it gave it to you. Right there. It's in hindsight and everything, guys, but this is the way I trade. That would have been the entry to take. Like I said, until you close it daily above this, because this candle closed under the open, that makes that a potential supply zone. So people would be shorting right there roughly, or here. And you can see that you almost got there on that day there. But this day right here would have been a huge signal. Well, we're back above it, so since we're in a bullish trend and since we're above the 21, and above the 50, the bulls are in control. And it's just now getting back to overbought. And when it breaks under overbought, it still could be strong, man, to the upside. So, next place for potential entries, 191,768 to the upside. So you just got to be patient. I would not short it. You got to try to stick with the trend, because when you take opposite side trades, especially when something's rocking and rolling like that, then they don't work out as often. And I'll just prove it to you by showing you this daily. All right. So this is clearly in a downtrend, right? Clearly in a downtrend. That would have been a shorting opportunity there. Not a buying opportunity, a shorting opportunity. It came up into the 50 and also old support. There's your breakdown of support. And if you check this candle here, you can see a retest of support. Thump. Puked. So this, after this extensive trending move to the downside, this is your real first opportunity of entering short. And there's your 50 or your 21 exponential even indicates that. So me getting long here is like literally going against what the market is saying. Going against it. On the daily time frame, this is not a buying opportunity. It's not a buying opportunity. On the only reason that I'm looking at it as a buying opportunity is because this was a massive move, and I don't believe that this is far enough correction. But after looking at the daily, yeah, it could be a far enough correction, seeing how you did get a fantastic move there to the downside. And today you're getting continuation. So we're just seeing if we get a bounce off of daily support. You know what I mean? If we get back up too close to the open of the day, we'll take profits and we'll probably move our stop to break even. We'll see. But since it's clearly like the trend is continuing, you can see the continuation based on the oscillator. So it's like the exact opposite of what you want to do. Even if you're just looking for a small bounce, because that stop is too wide to be looking for just a small bounce. I would literally need it to go to the open for not a good risk to reward trade, not a good trade, period. So that, that's just me. I do the same thing as other people. But it does look like it is trying to bounce here. So we'll leave it open for now. The S&P 500 still into this day's range. But this is the daily low right there. So the S&P 500 gets under that, you could potentially see a bounce. I want the Oanda one. It's bouncing off of supply from the previous day. Not really a huge bounce. Or it was. That's what made the low of day. And you're getting right back to it. Bitcoin's still fumbling in the same range. You went long. 181, 170. If you went long, then that means you're buying the top, which I'm not a proponent of. But I'll go look. Oh, JPY. I thought you were talking about pound Aussie. There's support there. You didn't tag the support. 181, 170. That's literally the close of yesterday. Your stop at 179.9, which is let me see. No, all H. All right, so there's your stop. Your entry is going to be the open of yesterday. But I'll go ahead and coordinates it 181, 170. Not bad. Not bad. But you got to get back to the highs to make a 2-to-1 risk to reward. And this looks almost identical to USJPY. So that's going to be based. It's going to be based on Japanese yen strength. So yeah, I mean, 1-to-1 would put you roughly around 182-ish, 182.6. That would give you a 1-to-1. Yeah, I like it. That's a pullback. I like it. I see what you done there too. You waited for a run below the previous day's low, which I like. It looks like your entry was based solely on the fact of getting back above yesterday's low. So yeah, you want to see today close green for sure. It's struggling at its open. But like, I mean, yesterday's low isn't, it's good that the 21 is there. So I would have potentially taken that. I don't have a massive problem with it. And you got a nice far away risk. So this spread needs to be 1% of your total portfolio. All right? And I think you could be safe even if the trade takes multiple days to play out. Because I like the fact that you got your stop under daily support, which would be there. So, yeah. Yeah, I do like the trade. T, which is AT&T. So Brian is showing me that he used his account and basically every long he's taken worked, and he's still in AT&T. Nice stuff. I'm not going to show that on the live stream, of course, because it's his actual account. But yeah, so far this options GPT T. All right, we'll look at T. T is AT&T, which is a very slow moving stock, very slow. And if you bought this, I don't know how it could still be working unless you bought it there, which you didn't. You bought it at 15.24. So that means you did not play options, you played stocks. Because I doubt there's a one, that's definitely not an option. You bought 500 shares there, 15.24. You got weekly support right under you, bro. So you definitely want to see it bounce here. For sure. So far on the day, it is not. Because that's the daily. That's the open and then straight move down to 15.21. So you bought it up there at 15.24. And I don't know what you're risking. But that's weekly support. But the fact that it's back to it, I mean, I would give it a small bounce because you can see like your pullback on the weekly work. AT&T's been getting crushed because they're leveraged like nobody's business. Like, I don't even know if they make money. 0.25%, 1,500 shares so far. All right. So you're just getting 0.25% on 1,500 shares. It looks like you bought 500, but I don't see the other three entries. You were filled at 10.10. Yeah, there's a chance that holds there. But this stock is freaking bearish. They don't make money. I mean, let's see if they make money. It's a good company, everybody says, but they are absolutely leveraged. They are absolutely leveraged to the max. I see it. 1,500 shares. Let's just look at it. Yeah, see, they don't make money. But you know who else don't make money? Oh, I lied. They do make money. Ford. But they're making less and less money. They used to make a lot more than that. But see, like, AT&T doesn't make money. That's why the stock is going down, 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 down. I mean, look at this earnings this year. Next year, 2%. Woohoo! Yeah, they don't look good. So hopefully they bounce. It bounces based on a technical basis alone. We'll say that. Based on a technical basis, I want to see AT&T bounce right here. Because there's nothing else stopping you under that. The monthly, or even under the monthly support, which is no. You don't want to be under the monthly support. Next area of potential support would be all the way down to $14.95, which of course you will be out of it before that. So hopefully it bounces here again for you. I mean, I put that on the daily or the weekly with anything, any technical indicators, it's going to be bearish. If you have time, can you just show me how to get your RSI indicator you use on TradingView? As the TradingView RSI indicator I try is different to yours. Yes. Okay. So let's go ahead and exit this one here. Remove. All right. So you go right here to indicators. You click on it. Now I have it just the relative strength index. This is a built-in script for TradingView. So whenever you see like volume, stochastic, like this stuff without a name over here, that means it's a built-in script from TradingView. So I use TradingView's relative strength index. All right, once it's pulled up over here, you then have to go into your settings cog, which is right there. You got to drop down this first. If you have multiple indicators up here, you got to drop it down so that way you can get the settings cog on this. First thing is what I do is I remove the MA. Boom, gone. And then I change the RSI to yellow. Then what I do is I go down here and I make these white. All right, and then that middle line is the most important. I want it to be a line. So there you go, my friend. That's on the 5-minute. Here's the daily. That's how you get it. Which you can see on this one, I just left the thick gray. But typically, you want the middle to be a line, and you want it to be more highlighted, say, than your upper and lower lines. So we'll make this more brighter than the other two. See? And that's it. I get rid of the moving average because the moving average is absolutely ridiculous. What do you need a moving average on this thing for? Right? There's only two. Okay, so it's an oscillator, which means it bounces from overbought to oversold. Not always, or from oversold to overbought. Not always, but that's technically what it's doing. It's a price oscillator. It's showing you the momentum in the stock or the asset that you're looking at. The volatility or the momentum. Like, there's your momentum, which is pretty, brutal on the daily on AT&T. Your momentum is, you're almost oversold after getting the bounce up there. So that would have been the shorting opportunity. And look where it was, right there. So basically, I would have waited for daily resistance, a line under. So the next day, price trades well above the level at which I am looking for a short. I would simply wait for price to get back under it. Then I would hit the sell button and use that as my stop. And if I would have done it on that day, you can see, boom, puked right down. And that's even based on the range. So beautiful, beautiful trade to the downside there. That's how you can maximize this oscillator, right? The reason the 50 is important is because the 50 is the dead middle center line of the indicator, right? This down here is when bears are in control of the asset. So all of this indicates the asset is bearish. Up here was indicating that the asset was bullish, and you even did get a little bitty pullback there. Right here. So that bearish candle there would have been a buying opportunity. As long as you're above the 21 or at it. Oh, shit. And you were. See this bearish candle there? This one right here. You get up above it, then you pulled back, and you stayed above the 21. That's a buy signal. But hopefully what I showed you there helps. The moving average is ridiculous and useless. It does nothing. Like, what is this? What is this for? To show you if it's trending or not? I mean, this doesn't help anything. If you would have bought it there, you lost money, right? I mean, it doesn't help. It's useless. It's useless. Just get rid of it. They used to, this didn't even have it a long time ago, but they updated it, obviously, and put it in there. So I get rid of that moving average. Just click it off. And I changed the color. Remember, the RSI was purple. I used yellow so that way you guys can see it better. Because a long time ago when I first started streaming, I just used the regular RSI and people were having a hard time seeing it with my black charts. So I just put yellow there so it highlights it. I mean, as of right now, the stock is completely and utterly bearish. But typically what he's doing is he's looking for bounces, especially first-time bounces off of these areas. And occasionally it doesn't work. But it does work a lot because his P&L out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 different entries, the AT&T one is the only one that isn't working for him as of right now. And it may end up working for him. I don't know where his 0.5% is, but it's probably getting pretty close at 1,500 shares. Thank God this stock is a slow mover, right? That's 15.21. It's just down to 15.14. That's a 6-cent move. 6 cents. That's not much. When you have 1,500 shares, it is, though. Right? The more shares you have of an asset, it don't take much. 1,500 shares times 0.06 equals $90. $90 on 6 cents. 2,000 shares would be $120. Can you live on $120 a day? That's only on 6 cents. I mean, from here to here is damn near $1. And I'm 100% positive you can short this asset. But Bitcoin is getting above the level of which we needed to see it get above. Let's see if it can maintain that. Or does it indeed find selling pressure up here? The S&P 500 bouncing before making a fresh daily low. Is it possible? Will it? Yes, it's possible. What's the dollar doing? Is the dollar green on the day? Oh, it was right there. No, it is 0.7%. So it looks like the dollar is selling back off at the open of the day. So there, we put the daily open on there, and one touch, two touch down. So as long as it's under 101,941, it will be bearish on the day. All right. Good morning, Heath. If you have time, can you show me how you get? All right. Just did that. James YouTube. It can customize it. Wait. At James Smith YouTube. You can customize it. Yeah. He was just saying the same thing as I just showed you literally how I customize it. Great call on Bitcoin. Yeah, it worked for a minute. For 5 minutes anyways. But it was exactly to profit. Very small move, but highly leveraged, and it makes money. But that's been stopped out since. But if you wanted to buy daily res, which is the area Bitcoin needs to stay above, you still got a nice move to the upside there on your part. More, in fact, than you did on the downside move. And Bitcoin technically is still trending in an upward direction according to the RSI and the daily 21 exponential moving average. Future Legends, please smash the fire and like button. I only see a like button, so yeah, please press that. Good morning, Tesla TA, please. All right, Tesla TA. So a lot of things are really cooling off. Some people are calling it just based on the fact that you got daily divergence staring you in the face. I mean, there and there. Even there and there is potential divergence if I pull it up all the way. But let's see. Yes. No, it's not. Sorry. But there to there is definitely divergence. So you're probably having a pullback here. But the thing is a lot of these things got overcooked. You still did not fill that gap down there at 234 nor do you need to, right? Nor do you need to fill it. So I would just base this one on looking for the what is that? Looking for a pullback close to the 21 or on the 50, and then make sure there's a price there as well, not just off the indicators, because indicators will get you killed. As I've shown many, many times, price is the key. It's not the indicator. The indicator can help you, but you definitely need a support there as well. Like, say, here or here, right? You need a daily support in the mix. Now, if you get down to that daily support, you're probably going to be under the 21. But the other one that you can use, obviously, is the 50. Those are the two trending indicators that are used mostly on the daily. All right, so the 50 would put you probably roughly around that support zone and around the 50. So you got time. There's nothing to do now. I wouldn't buy it right now. You are in bearish divergence, and the divergence could have played out, but I mean, you put in new divergence. Right? So if this would have been bearish divergence, I would claim that it's already been played out because it tagged the 50 or got really close to it. However, the divergence is from this high or from that close to that close. That's your divergence. Right? That is your divergence. So you got to at least wait for that to play out. And you're close to it playing out. Just make sure you coincide it with an entry. And then still you're buying this thing at maximum peak top trend also. Right? But as long as it's trending to the upside, you can buy it. I mean, that's all I got on Tesla right now. There's a weekly support right here. On the weekly, you just got a nice little silver cross there. Suggests you will see continuation. Notice how you got oversold on the weekly? I'd say a weekly 50 test would be even better, but I know nobody's got patience for that. Most people don't have patience to wait for just a 50 test on the daily. But you can't be a seller of it either. You know what I mean? Because you're trending. I mean, the Heath level did hold, but... So I want to see a deeper correction. I would want to see it get really close, or even at least touch that 21. And then I would want to see a daily close above that. As, you know, shown as per earlier, that would give you an idea of maybe potentially go wait on a support test. But you haven't pulled back that far. Now, you don't have to either. Because if depending on how bullish it's going to stay. But here's the thing. We're getting closer and closer and closer. Each month that goes by makes us closer and closer to the yield curve inverted recessionary determinator. All right? So your Uber bears out there still saying, yeah, but what about the yield curve, the 3-month and the 10-year, plus the 2-year and the 10-month, or the 2-year and the 10-year? I can tell you every single one of these are inverted, pretty much. Your 20-year is more expensive than your 30-year, so your 20-year is inverted to your 30-year. 10-year, 20-year is not inverted, so yay, that's good. But your 5-year is 424, 20-year is 422. So the 5-year is inverted with the 10-year and the 20-year. So literally this is all screwed up, right? All of it. And then when you get down closer to 3-month, 10-year, it's extremely freaking inverted. Extremely inverted. Like more inverted than... I tap max here, and that's the max data I get on Fred. But you can see all the previous inversions have called a recession. Inversion, recession, inversion, recession, inversion, recession, inversion. Right? That's a massive inversion. I don't know if it's the biggest because I can't even go back in time past the 80s looking at the 3-month and the 10-year on this chart. Yeah, barely. All right, so let's get rid of the green lines here. I want them off, dude. They are off. Why are they on then? Oh, that's not right. This is... See, my EMAs used to be on top, but I can't get them back on top no matter what I try. All right, so let's get rid of the indicators and let's invert this baby. All right? What is it? USO. I think it's a 0. That is a 0. 3M. See, this is as far as I get the 3-month. February 2014. I can't show you any inversions beyond that. I just don't have the data. I don't know how to get the data either. I'm not a data grabber person, right? I'm not the type of person like TXMC. He can find this data. He's got APIs to basically every single data point that Fred offers. So he's got data all the way back to the damn 40s or 50s or 70s, somewhere in there. But as you can see, that's the most data I can get. So from the maximum data point that I can see, this is definitely the most inverted it has ever been. There's an inversion right there. Here's the inversion right there. See that wick goes under it? Boom. There's your inversion. Maybe if I same scale it, I don't know. Yeah, I can't get it. So, you know, when you want to know stuff like that, I refer you to TXMC. It's Alpha Beta Soup on YouTube. I don't agree with everything that he says, obviously, but it is what it is, right? I don't know him as a person. His data is fantastic. As far as gathering data and making a bias from the data he gathers, he is second to none. All right. But he does ignore some bullish data points as well, like price and moving averages and stuff like that. Like, totally ignores it. Why? Because to him, it has no merit, no meaning, doesn't matter. And to him, price doesn't matter. He literally said there is no price on the S&P 500 that will call a recession. I don't care what price it is at. A recession is likely coming. According to the 3-month, 10-year inversion, yeah. And other data points that he's got, you know, moving slower. I showed the actual version of those charts, and the way you look at them, the way he has them splayed out is completely different than the way that the Fred has them splayed out. So if you go and find all those weak data points, which we know they're weak, you know what I'm saying? You can just go back and look at the data points for the last 5-6 months. The economy in some places is slowing. So yeah, there is a potential for an inversion or for a recession. And if a recession happens, that absolutely means we could see brand new yearly lows. Also, we could take out 2022's low, right? If you take out 2020's low, you are going to have over a 50% decline. 54%. And that will be very, very bad for teachers, firemen, police officers, literally anybody that has a 401k, like anybody that has mutual funds or anything, right? Anything. It's all going to be gone. 50% of it. So we don't want a recession, obviously. He wants a recession so he can say, I was right. But the problem of that is the same of someone saying, you know, I'm right, I'm going to be right, but I just don't know when I'll be right. But I will be right. It's a 50-50 shot. There's a 50-50 shot. He says it ain't a price that matters. He don't care about price, but he is very, very, very concerned with this price right here. Because his whole thesis is based on this price will get taken out. My problem with that is you missed all of this. Oh shit, I probably shouldn't be showing that. Never mind that. Forget that. But anyway, yeah, you missed out on all of that. All of that upside from the lows. You know, it's better than 26%. From the yearly open, it's like what, 15%. So it has already outperformed its yearly expected move. The S&P on a year-over-year basis is anywhere from 8 to 12%. Since you've already hit 15%, guess what? Boom. Targets hit. Yeah. Now we can relax, right? That's all that freaking matters. Price is P&L. And if you are in this game as a trader / investor, then price should matter to you. And also one other thing that I said that never happened before is that anytime Apple has made a fresh all-time high during every bear market since Apple has been a publicly traded company, the bear market was over every single time until the next economic downturn or whatever, right? Until the next one. which could be, anywhere from 5 to 10 years out. It's cyclical. The markets are cyclical. And when you get assets that are very good assets and are very cheap, you should buy them always. Who gives a shit about the uber bears out there talking about fresh new lows? Even on Bitcoin, right? We got all this garbage here, but even on Bitcoin, fresh new lows. Had you bought on the yearly opening, you would be up over 100%. Nope, 89%, 85%. That's a nice return, people. 85% since the bears have been claiming $10,000 Bitcoin. Price has moved up 85%. So, yeah, it could roll over here because you're testing a 12-month Heath level or supply, if you will. Right? $30,000. Remember I said there is a lot of supply setting above $30,000. There's why. I mean, it's literally yearly supply. We are trading above it, but like from 30,000 to 32,000, it's a difficult range. Difficult range. Did anybody buy that test? I mean, nice. So today's close is going to be important for Bitcoin. I don't put much weight on trend lines, though. Excuse me. It looks good, right? Still looks good, but it could fall at any point. And if you want to short it, look for shorts roughly around April's high, because that's where you turned around yesterday. Right? Your monthly looks like that. That's what your monthly looks like. Last month was a beautiful bullish engulfing, but we are not able to get anything going. 20 days left, though, right? 20 days left. Remember, this month looked terrible almost until the end of the month. So all the way to the 15th of June. That's when you turned around. And today is the 11th of July. So give this thing 3, 4, 5 more days. If it is still putting in lower closes up compared to this one, that's going to look like a short. It is going to look like a short on a monthly basis. So we just have to take it day by day, but we're getting close to the midpoint of the month, and that could be exactly when you need to short it. We'll see if it happens or not. I would love to see bullish continuation, something like this, right? That shows you that you're bullish. When you get up here, this is more of not an accumulation formation. It's more of a distribution formation because you made fresh yearly highs. Accumulation formations occur at lows, but clearly people are buying at $29,000. They have already missed the freaking move. You are literally buying after the market made an 84% move to the upside. And in a year with economic uncertainties. So that's not good. I just got stopped out of the Aussie CAD trade. I think the whole downside to UJ might be overlooked with the BOJ 9 intervening. Any DXY strength could easily pump. Definitely, and it's in an uptrend. That's why I told the person that you could definitely take the long trade there, right? And the trade worked to perfection, as shown earlier in inside the video, or the live stream. It did get up to where you should have taken profits and moved your stop. So yeah, this is still bullish, no matter how you look at it. You're up on the year, you're making fresh yearly highs, and this is a very, vicious pullback, because obviously a lot of people were selling there at the quarterly resistance, However, it could get bought right back up based on the BOJ not doing anything. That's the whole problem. The reason the reason the yen is weak is because everybody else in the world is raising their interest rates and they are not. So traders are taking that information and shorting it every time it gets a pop. So here you go. There is your pullback. If you do think USD JPY is going to make fresh highs, right in here is where you need to be looking for entries. All right? Looking for entries. But if you look at a major move based on Fibonacci, you're also going to see something very, very, very peculiar. There's a 702 retracement on the major move in 2022 and 23. The downside that we experienced. So pullback. Ugh. This was my target. But until the BOJ intervenes again, probably will not see it. And the thing is the BOJ really can't raise interest rates, or they could go into a massive economical downturn, and that could literally set off like other economies collapsing as well, because they are the biggest holder of US debt in the world. So if they start selling that debt, oof, right? Oof. Not good for the US, not good for other economies now that it's like a world economy, if you will, because the DXY is the world reserve currency. Can I look at coin? Yeah, we're going to wrap this up real soon. If you haven't noticed, I like to rant. Yeah, coin moving to the upside. This could be irrelevant on Bitcoin's basis, right? Coin does move kind of sort of with Bitcoin, but not really either. It had a nice move. It's up over 149% on the year. So you missed that. But we didn't, because we were talking about buying these lows in here when they occurred. When we were doing the live streams down here around this stuff, I was the only one saying, buy this stuff, man, because you might not get another opportunity to do it again. Coin came off big time from its IPO. This thing lost 92 freaking percent. That's a buy if you think coin is going to continue to be able to do business in America. It will get back up there eventually. I don't know how long it takes or whatnot, but yeah, that's the time to be the buyer for the investments. Right now, coin is having a nice move, breaking out above the old yearly high. Bitcoin did that 3 days ago. Made fresh yearly highs and reversed. Well, 5 days ago. Yeah, 5 days ago. Bitcoin made fresh daily highs and reversed. So I don't know what's up with coin. Apparently people like it, right? Apparently people like it. This is when the BlackRock news was announced. It literally went straight up, or was it? What's the date? June the 15th is when the BlackRock news was announced. Yeah, it looks like there was some insider trading going on coin. Because they literally bought it days before the announcement. Yeah, it's doing much better than Bitcoin. So we'll see. I mean, I wouldn't be a buyer of it, dude. Not up here. You need a pullback. First area, according to the daily chart, would be there. 71.55. You don't have any bearish div going on, so that's good. This could be a short squeeze. That's literally all it could be. because people were probably short here. They're like, that's the yearly high. Bitcoin made a yearly high and dumped. So I'm going to sell my shares there. And it's literally roughly around the midpoint. But the close is what matters. Where does it close today? Does it close up here? If it does, then yeah, it could be a short squeeze. But I wouldn't be a buyer of it. And I damn sure would not be trying to sell it because it is ripping people's faces off now that sold it. That's why you got that. But you're massively overbought, so you got to wait for a pullback. All right. Let me... Disney, upside targets, blah, boom, thank you. He's what? All right. Yeah, let's look at Disney and then we're done. Disney, I don't like them. I don't like them because their content is shit. Once their content is no longer shit, then they will probably start doing better again. Their parks are going to make money until they don't. So Disney owns a lot of other stuff now. They like own ESPN. They own whatever. They're trying to own Hulu. I thought they did own Hulu. I guess they just had a major piece of Hulu, but they're trying to finish that deal, which is not really smart, seeing how they are. That means they're competing with themselves essentially on the streaming front. And their streaming services is not doing so hot according to other things, right? On the weekly, you can see you're trading at the yearly opening range. So, I mean, technically, if they can get their shit together, this is a price at which you would want to be a buyer. All right? This is a price of which you would want to be a buyer. Where did the earnings go? So they're hit and miss on their earnings for the last, since 2022. Right? So, yeah, if you want to buy it ahead of earnings. I could say you could be a buyer of it. But you're not buying it with leverage. You're buying it to hold it. You can buy it right where it is. You did already test this price and you got that big of a bounce and you're right back to it. So it could break down as well. But yeah, this is the price you want to be a buyer. If you start to get downside continuation, then I would probably drop the shares because that means Disney is going to close out the year red. It doesn't mean it will. It's just the probabilities become better because you're 7 months into the year and you're where you started the beginning of the year. That's usually not a good sign for a company as far as their stock price is concerned. But if you want to be a buyer, you can buy where it is. And that's it. So thank you guys. We will go live tomorrow, of course, before we'll start it at 8 in the morning because the CPI comes out at 8:30. So we will be live tomorrow as well. We got to get that CPI number. And I definitely want it to beat expectations as that could propel Bitcoin to higher prices. All right. Potentially. That would also indicate that inflation is continuing to go down. And we know that with trueflation, shoot. I don't want their methodology. There we go. This is lower, 2.45%. Yesterday it was 2.58%. Or a couple of days ago, 2.59%. So trueflation shows that we're just literally 4.5 points off of the Fed's expected inflation target, which should cause them to pause. But will they? It's undoubtful. I mean, the market's pricing in a 95 or 92.4% chance of that happening. So there probably is going to be a rate hike. And there is a statistic that the last time the Fed ended up hiking rates into a recession ended up being a very, very bad one. So they should probably not. Upside targets for Disney, I wouldn't have any upside targets. I mean, for the range, you got resistance at 91.99. I mean, and that's a midpoint of last month's test. So, like, this is a big down month. So I wouldn't expect anything above the midpoint of that. $95 maybe upside targets. Because like I said, they're unable to get their stuff together. If they have a good beat on earnings, that could thrust prices higher, but we'll see. As far as where it is, you can see that it was there last month and the month before, and it has not been able to get any kind of bullish continuation from this price. Now, this could be people accumulating it, but technically it looks bad. It just does. It looks like it's trying to break down. And if it does break down, I would have a bearish target of potentially $79. So are you willing to eat that? 89 to 79. It's a $10 loss on every share you own. So be careful, right? Put stops in place, maybe here, as that way you're not losing a tremendous amount. But where it currently is, I like it, but I hate the fact that for all month, it has not been able to do anything. In fact, I wouldn't sell it just because it's so close to support, but the sell was up here. You want to sell the swing highs in a downtrend. It's technically not in a downtrend, but the bears are in control of the asset, and they have been, right, since the May. So be careful. But yeah, it's at the yearly opening range. With that, we will end it. I bought coin and other stuff on your comments about yearly opens. Nice. Fantastic. You're up huge on that position. Good job. All right, guys, we'll see you tomorrow. It will be tomorrow, 8 o'clock a.m., unless something happens. With that, I leave you. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.